They talk about in monetary policy the signal value of movements by the central bank. For example, a tightening means the economy is good enough to take the tightening. A loosening means, wait a second, maybe things are worse than I thought. I think the interconnectedness that matters at this very moment is less about macroeconomic fundamentals and more about systemic risk. We're connected economically, but also connected through our banking system. Trichet signals to markets things are worse than we thought. And the ricochet that's happening right now is more about the concern about systemic risk on the part of investors than it is about, I agree with you, the macroeconomic fundamentals are deteriorating. I think that story's been out there for a while. I think the panic, it's not quite a panic yet. The concern this morning is about systemic risk.
If you were on the Capital Committee, if you were on the risk committee of a large financial U.S. institution, and they're doing different repos and they're trading and they basically have counterparty risk with some of these large European banks. If you're on that risk committee, do you tell them to be more concerned now?
Yes, I do. And I wonder what the story is that's going on behind the scenes. And I might go back and I might check my channels and there might be emails going out about so-and-so trading with somebody else. That's what happens. It happens that the lights go out in the room, which is the global money market trading room, okay? And if all of a sudden I'm blind and I don't know how well off my counterparty is, I hold back. I don't move in the room until I know what the landscape is. That's what happened back in 2008. I'm not saying we're there right now, but I'm saying that there's some doubt right now in the money markets, and that's when you see, when you look at things like the two-year being displaced.
Why wouldn't there be doubt? To the point I made, you had a relatively sort of hawkish ECB a short time ago.
I agree with what you're saying.
Suddenly, Trichet's coming out and saying things are worse. Barroso's now saying maybe we shouldn't do some of these bailouts because they probably won't work. Look at the markets. Wiedemann of the Bundesbank is making his own comments. It seems that you've just got the market has woken up to the realization that maybe Europe doesn't have it together at all.
Well, I will say there's two things. I think Barroso and Trichet were both in the same line where Barroso said the stuff we've done hasn't worked yet. That's not a sign of confidence. And Trichet saying, really, it's a policy reversal. And it's almost two policy reversals, Brian, because remember, they were going to be hiking rates all the way to 2% by the end of this year, right? And then the other side of that is that they were going to stop these non-standard measures. Well, guess what? They're not raising rates, and they've not stopped the non-standard measures. So those two things are going the other way. And now I think the question, Brian, becomes how and what does the Federal Reserve do? Do they feel like they're now at a point
we got to get to Just Staley at J.P. Morgan, Steve, but I'll tell you this much. If I was Ben Bernanke, I'd be on the phone with Trichet right now.
My guess is that call's happened.